Hi, it's Richard Hemming here from Under the Radar Report. It's great to be back. Today, I want to talk about how you cannot rely on big caps or big cap dominated ETFs for your financial future. You cannot rely on them to do all the heavy lifting when it comes to looking after your precious wealth. Yes, you need to rely on small caps as well. And I'm going to name names, as in stocks we're buying and selling. But let's get into it. So this week we talked to subscribers about the big profits we've been making and, will continue to make from founder-led small caps. Of course, there's Afterpay, but there's also a raft of other stocks, including like the contractors, Southern Cross Electrical, GR Engineering, you name it, there's heaps of them. Nick Scali, the retailer. At any one time, we have 4 or 5 founder-led companies in our best buys, for good reason. It's true. Self-interest is more reliable than most things in this world. Skin in the game counts. So this doesn't happen as much in big caps, certainly not nearly as much. But on the blue chip side, you're not going to find many founder-led businesses. What you're going to find is professional managers doing their best to serve secular themes. So the aim is to hop on and hop off and get dividends in the meantime. But right now, and I'm thinking of domestic orientated blue chips, there's a lot more risk. Thinking retailers, banks, think healthcare, think industrials. These stocks are at risk. Why are they at risk? Well, last month's data from the OECD, it comes out every year. They do productivity analysis across 28 different countries. So Australia came second last behind Mexico. So our growth rate in the past 5 years has been about minus 2%. Worse than that, actually, minus 2% a year for the past 5 years. So we're going backwards. Let's compare that to China, who's not even in the OECD. Their growth rate has come off, but it's close to 5% a year. What about the US? That's about 2% a year. So 4 points above ours, but still well behind China. So why are blue chips at risk? For one thing, ETFs in many cases have pumped up their prices, so they're expensive relative to what they should be. But the bigger, more fundamental point is that these big companies rely most on economic growth from productivity. So what's going on? Why is productivity in Australia in such a doldrum? Well, we have big factors in our favor in Australia. We've got population growth. We've got a huge terms of trade surplus. So basically the difference between our exports and our imports is really high because commodities have been going through the roof. So that has to be combined with, in Australia, the work from home phenomenon, which unlike other countries that have gone back to work, we haven't. So it's more pronounced here than anywhere else. And that's where you get your R&D. That's where you get your innovation from. People interacting together face to face. It's not just population growth, let me tell you. It's also innovation. So let's look at China. What's happening there? Why are they so good on the productivity front? Well, they have low population growth. The famed one-child policy means their population is going backwards. They have a much lower terms of trade. Why is their terms of trade much lower? Like the average export price they get versus the import price? Because a lot of their, import costs are going up because they're importing commodities from us. So basically, they have to rely on productivity. They have to rely on innovation. They have to rely on R&D to grow their economy. They can't be lazy. So what's the takeout? Simply that you need to be taking profits on stocks that have moved, we're talking about the secular themes that have really gone hard. So you need to be taking profits from winners. You need to be hunting for value. In the blue chips, this means looking for dividends. In the small caps, this means looking for growth potential at good value. So we've been selling stocks like AMP. We've been selling Medibank Private, these stocks have had tremendous gains. We've been banking profits. We've been buying on the blue chip side, APA, the pipeline operator. That stock's been going really well for us, up, 28, 30% in the past 12 months, but still trading on a dividend yield of close to 6%. Yes, people want gas. So what about small caps? Well, we just had a takeover of OFX, which has really boosted our portfolio, climbing. It spiked 70% on a takeover offer. So you're not going to have that in big caps. But that promotion aside, we spent a great deal of time analyzing Macquarie Technology. This is a classic founder-led company. It deserves your attention. Have a look at it. So I urge you to check this one out. So looking forward to talking to you next time. There's so many growth opportunities out there. We are so excited under the radar report.